The S&P stock market crash continues. Maybe. We pulled down again. We're just smashing into the bottom of this bull channel. Can't tell if it's going to hold as support or not here. It's a little sketchy. We need to take a look at some stuff. I'm going to do some more long-term indicators, some more macro stuff this episode, and see if there's anything useful in the data that can help us figure out where this thing is headed. So please like, share, comment, subscribe, turn on notifications, and let's see what this thing looks like. Yeah, so we're back to looking at bear scenario all of a sudden. Man, I just did a video that we're, in the middle and nothing's crazy. I guess shit's crazy again. Let's take a look. Big red volume candle. Bang, right down into the bottom of the bull channel. All right, let me zoom out. Let's take a look at where the S&P is. I guess it's not crazy yet. We're just at support, but let me go out and let's look at this bull channel. So this little yellow line up here is the bull channel that we're in right now, which is a really aggressive bull channel that's headed up towards major resistance up here in the big bull channel. And this is our big bull channel that goes back to 2008. We've never tried to break out of this thing. The little bull channel, so our big bull channel, we have chopped under it. We've coiled under a couple of times. So it looks a little sketchy. But the little bull channel, let me get back in. Yeah, our little bull channel here that we've been on the last few months, we've definitely broken down out of this thing and just straight up destroyed this. So this is not really a support area. It's more of just a reaction line. We have a resistance line up here, the top of this little bull channel. Anyway, heads up. Heads up, because we are right back down smashing into the bottom of this bull channel, and that doesn't look very pretty. So the bearish outlook, we've already kind of painted a bearish line that we could try to strike again down here, somewhere in the low fours. And the big convergence I was looking at a couple of weeks has passed. And so really the only thing underneath, if we want to break down out of this bull channel, it would probably look something like strike this downline, then probably go back and back test this thing. And then who knows? Like, if we're gonna make a bear move, I mean, let's look at it. There's not a whole lot in between this little bull channel and the bottom of the big bull channel. There's just not much there. And so maybe that's a bearish trend line, and who knows, whatever, down to the bottom of the big bull channel. If we were gonna do a real bear move, like, that's where I would see it, around 36. Like 36, and that's like getting into late May. So if we wanted to do bear moves like all throughout May, we've already got a bear trend line painted. We have a downward target, and then there's definitely some, well, not really. I mean, these kind of horizontal lines just got a little bit of reaction when we were pulling back here, but they may not do that. Anyway, that's the bearish idea. If we break down under this bull channel, we were looking for a bearish kind of back test, and then that's a short entry if we're back testing this thing. That could happen over the next week or something, potentially. And then the bull case is the same kind of thing. Right now we're still bullish, we're still in the channel. And so, the boring bull case is just kind of bull up the bull channel for a couple of months until we run into big time resistance up here at 43, 44. Or the little more dramatic bull cases pop out of this channel early and then run into major resistance a little bit earlier. But in either case, when we're getting up to this 43.5 kind of range, that's getting into the top of the big bull channel, and that would be dangerous. So S&P is being dramatic, which is kind of fun maybe. And also we are seeing Bitcoin. Oh, Bitcoin's pulling down more. So I was saying earlier that Bitcoin is making bearish moves. We have this bearish flag breaking down, and it really is. It's really breaking down now. So these bearish moves in Bitcoin sometimes lead the S&P down, and so I guess I can do the Bitcoin targets pretty quick. On the downside, this does look super bearish. I am bearish Bitcoin for about a week. I'm bearish Bitcoin for about a week. I've been looking kind of for a reversal point in Bitcoin because it's been doing this consolidation. It's a bearish flag pattern. This is an ending diagonal bearish flag, and it is ripping down out of here. So this thing looks dangerous. I mean, we have moving average support at 45. That's like the non-dramatic kind of pullback target, 45. When you get to 40, that's more dramatic. Like now we're filling the gaps and we're like sticking a dart down. So yeah, 45 is like the non-drama pullback. 40 is a little dramatic. And then I was pointing out the top of the last peak is 20. And we've never top tested that. We hit it from underneath. We gapped out of here. So that's the Bitcoin thing. We got this gap in here above the 40. We have a big gap in here above the 20. So I think 40 is like kind of the realistic downside target for Bitcoin as like a bearish entry. And if we go below that, like it could get a little crazy. Anyway, I haven't looked at the dollar in a while. So what is the dollar doing? It hasn't decided. Dollar has not decided what to do. Okay. So, I mean, Jan 6, boom, right here. We did the double bottom uphill bull move on the dollar, and that's gone for a couple of months. We got all the way up to this previous kind of resistance area, rejected hard off of it. Now, this is like right on the moving averages. It's right on the trend line. Are we going to pick up a bullish dollar, which will be bad for the stock market, or are we going to go into another weak dollar move, which will be really good for the stock market? Not sure. Dollar hasn't decided what's it going to do. But let's look at, I have like a dollar versus yen, this thing. What's this doing? Oh, okay, this is ripping back. Okay, so the dollar versus the yen is an interesting chart. It sometimes gives you a heads up, like what the DXY might be doing. So we have this really long-term consolidation on the dollar versus the yen, and we had a pretty good breakout here near the end of this. It's like, looks like a bull flag, dollar versus yen bull flag. So I've been bullish, and the same thing, Jan 6 right here is when the yen started ripping, but it didn't do like a double bottom. It just freaking ripped out the top of the channel. So we may be doing a breakout back test move and going bullish here is what it looks like. This looks like a bull flag breakout. If the yen chart, if the dollar versus the yen is doing a consolidation like breakout move, the DXY is going to be strong too. I'm still in the strong dollar camp this week, and I want to see what this does. But if we break down here, I'll be in the weak dollar camp, and the DXY is less dramatic, but these two tend to do similar stuff. So anyway, that's the idea, is that the dollar is not giving us any kind of heads up what the stock market's going to do, but Bitcoin is indicating that we might want to pull back. And then I was looking at gold earlier too, because gold is trying to go bullish, but it's running into resistance right now. And so if gold can break out and get bullish, while Bitcoin is bearish, and if the dollar and gold go bullish, that's going to be bad for Bitcoin and for the stock market. So that's kind of the thing. Like, it's a bunch of things like right at resistance right now. Can't tell what direction they're going to go. But it is super sketch, and I did not expect the freaking S&P to dive bomb down to the bottom of the channel again, just in like an hour here toward close. This is really dramatic, and this is not a good look either. This is not a good shape. This looks like a bearish flag. We're still above resistance here, but just this huge red candle, and it's not right at close. Like, this is, 2 hours before close. It's not like a closing candle. This is a legit downside rip on the S&P, and it's just sort of a continuation of that down move. It doesn't look good. The technicals don't look good. but the momentum is still okay. Wait, I got an idea. Let's do some momentum and see. Oh, not this. Well, let's check that too. All right, let's check some indicators. Do some macro kind of technical indicators, larger scale stuff. Right, so this on the daily is getting a little bit of negative divergence here. You can see that this previous peak was way up on the RSI, and this peak that we just did a couple of days ago is a much higher peak on the chart, but it's a much lower peak on the RSI. So that's called divergence on the RSI. That's a dangerous bearish indicator. Let's go out to the weekly and see if there's anything going on. And well, yeah, so this previous peak here is not scary on the weekly time frame, but these two big moves, the Volmageddon peak right here in 2018 and the COVID peak right here, 2020, Feb 2020, that is a longer term bearish divergence. Give me my freaking, oh, I drew it on the wrong chart. Yeah, here, check this out. That doesn't look good. That's like three major peaks, and that doesn't necessarily, I mean, this little peak isn't necessarily like the real peak or anything like that, but if we start pulling down, that could be a long-term peak, just looking at the RSI. So when you get overextended up here, the market tends to pull back, but like the big crashes come from getting a lower peak or another lower peak, and it's when you cross this channel from the top half down to the bottom half. That's when you get the real down movements on the S&P chart, is when you move from the top half down to the bottom half. And so you can see Volmageddon pulled down, but it only pulled down halfway. It wasn't a huge crash. The COVID crash ripped across the channel, and that was a monster. And you can see it here. And also, the late 2018 crossed the channel, and that did get down movement here. So that's just kind of how the RSI relates to the S&P. Is, yeah, you kind of want to cross from the top half to the bottom half in terms of a bearish move. And RSI is largely just like a bearish leading indicator. Like you can see the negative divergence, and then you can see if it's trending, and that's what it's doing. It's doing it right now. Actually, that looks pretty scary. I wasn't thinking that the stock market could pull down that much right now, but the weekly and the daily RSI don't look great. All right, so let's look at some momentum. Here's the MACD. This is the momentum on dueling moving averages. So the blue line is the shorter moving average, and it moves more, and the red line kind of follows it. And when these cross over, you can get some movements. So basically here on the MACD, we are up. If you're above this halfway line, this is bull territory. So on the weekly time frame, this is long-term yearly outlooks. The blue line's ahead of the red line, which is bullish, and we're way up on the bullish side of the chart. So all that's super bullish long-term, and we are definitely bulling. That's not a surprise. But let's start winding down to the shorter time frames and see what we get. Now, I haven't looked at this in a little while. Okay, so the daily chart, this is looking at a few months, and we are up on the bullish side of the chart, but we are maybe crisscrossing these lines and trying to make a bearish move, but it's a bear move in bull territory if it decides to do it. And it doesn't look particularly scary right now. That's probably like a 10% chance that this thing rips like down to the zero line and past it. It's not particularly scary on the long, 3-something month. Let's start drilling down on the hourly charts. Okay, so this is sort of neutral, relatively neutral. Looking out on the next week or two, relatively neutral here, trying to make bearish moves. for relatively neutral. It's crossing over, so it looks a little bearish, but it's still on the bull side. And then this one is starting to make a bear move now. On the hourly chart, that's like looking at a week or so. And it's not super bearish, it's just starting a bear move. And then we can kind of drill down shorter to kind of see what it's looking like coming into tomorrow. And not surprisingly, this looks a little bit bearish. We just did a huge rip. So the short-term time frame looking out the next day or two is starting to look bearish. So that's kind of the momentum. We're long-term bullish, medium-term a little bit bullish still, and short-term it's making a bear move, which is kind of obvious. You can see it's making a freaking bear move. So the momentum's not too surprising there, but it's heads up. It's heads up on a bear move though, because if we get down under this channel, getting back up there is not going to be quite as easy as it was. You know, we came down here and checked down and got consolidation, and we came up and hit it. It's a little easier to get into the bull channel there. If we rip down and fall out of the channel here, it's going to be a lot harder to get back up in there. So anyway, that's just the bear scare for today, as we're just at support and things are still bullish until it falls under here. And so 40, I mean, it doesn't have to fall far under there. If we hit 41, we're in trouble. We don't even have to get that far down, but if we hit 41, we're in trouble. And that's just kind of the look on the crash continues. It continues. So much drama. I don't know what's going on. I was looking at the IWM. So, and it's not really leading this move. I did a, let's see. I did a look at, this is a mess, a potential topping pattern on the IWM. Because, I mean, we've been bulling for over a year on this thing. But we just did this sideways consolidation. We did this rolling top, which is a little scary. And now we're consolidating up, which is fine. So this looks bullish. I've heard people say this might be a bullish flag, and it's not a bull flag. Nothing about this shape is a bull flag. It's absolutely not a bull flag. But if we keep support, we can bull out from here. And if we break down, this thing could be really scary looking. And we should find that out in about a week. If this is going to hold, if the S&P is going to hold. I think if we're going to break down, the IWM may be one of the best short options, because the margin loans on this thing are out of freaking control. Like, this has the most margin loans of anything that are visible. Not including like bank swaps and stuff where you can't see the loans, but the visible margin loans on the IWM are just freaking out of control, and this thing is way, way overextended above all kinds of moving averages. I mean, this thing's just way up here. So, I mean, just to pull back to like 205, just to pull back to like the daily 120-day moving average would be normal, but, I mean, there's just huge downside to 160 and probably overshoot it 150 somewhere. Like if the market actually turns over, the IWM could just make a beast of a move down. As far as an index goes, I mean, this is the Russell 2000 small caps. It has a bunch of exposure to financials, and it has a ton of margin loan, and these are smaller companies. But yeah, as far as an index goes, this thing could rip down. As far as individual stocks go, I'm sure you can find individual stocks that fall farther if the market's going to turn over. I wasn't thinking about doing a bearish video today. We're up in the bull channel again, but it is tapping the bottom of the bull channel now, so it kind of heads up. Let's see. Let's check some other things. So I haven't talked about like tech rotation or anything like that for a while. It was looking like, you know, when we started coming down off Tesla and ARK started coming down, it was looking like we might be rotating out of tech, which means we might be rotating into materials and minerals and miners and metals and things like that. And that could be happening, but this down move I don't think is big enough to throw tech into like a trailing sector. So I'm not quite as high on that theory. Right now, Tesla's just doing a boring consolidation, and it's definitely hasn't been leading the market up. So it's possible that tech starts lagging a little bit. There's one, let's look at ARK, and then I want to look at uh, the Nasdaq versus the S&P chart. What is ARK doing right now? ARK-K. So ARK-K really led this kind of tech move down the past month. And it had a similar chart to Tesla, but it's consolidating more downward. And this consolidation could go on for a couple of months. But if this thing just consolidates down to the side, and the S&P is bulling up to that channel, then that's pretty straight on what I was saying. Like, tech is not going to lead. It's going to be a trailing sector to the top. In which case, I really like FCX. This is the momentum leading stock in the materials and minerals and miners section. This is Freeport. And I mean, this thing has been checking at cross and just doing boring stuff for, 2 months or something. But if we do get another big rip to the upside, I like this one to sort of lead up. Yeah, this thing. Okay, Nasdaq versus the S&P is the chart that I've been paying attention to recently, talking about a tech rotation, because let me get out to a weekly. You can see the Nasdaq versus the S&P. Then I'm going to go back to the 80s because that's when it started going. So pretty much in the 70s, bonds started bulling. In the 80s, the stock market started bulling, specifically like 1982. And then you can see in the 90s right here is when the Nasdaq started to even outperform the general market. And then this is the dot-com bubble blow off here, which looks a little ridiculous, but you can see where it hooked up to. And this is just a ratio, so these numbers don't matter. But this top line, where the dot-com bubble hit, like we bulled all the way back up, and we sort of gapped up there on top. So we jumped up on top of this thing, and this is the Cathie Wood indicator. And it's a really important thing because if we do jump on top here, if we hold, and if we bull from here, this means that tech and innovation and everything is going to outperform the whole market probably long term, and we're going to bull out, and tech is going to bull out. So I'm calling it the Cathie Wood indicator because that's like perfect for her stuff. But we just gapped up here, and we don't know if this is going to hold. And so if we break down, we'll probably cross the gap, and we'll probably break down below that. And if we break down, that is the sector rotation playing out, where tech is actually rotating out. And that would shock a ton of people because like nobody can fathom the idea that tech will suck. Like everyone's thinking like tech is amazing and blah blah blah, but it doesn't have that much to do with tech and growth. It has more to do with the banking system providing just tons of loans to all of these companies. If the banking system tightens up and they're not loaning to growth companies because of the huge risk involved, then they're going to come down. And it's just that simple. It just has to do with the banking system, not like Elon Musk or, whatever, any of these tech companies like, being good at tech or something. It has to do with loans. And so we still don't know. Haven't gotten a move away from this kind of trend line yet to see what the trend is. So this video is not indicating anything. It's just saying we're at like these critical spots on all these different charts at the same time, which is kind of cool. But anyway, that's kind of the check-in. I don't know if there's anything else like super worth looking at in here. I don't know, maybe silver? Let's check out silver. What's silver doing? Okay, so this is a weekly chart. So you can see the COVID crash here. Silver just ripped up onto a huge bull flag. And the silver people are freaking out on every little tiny move on silver. But silver moves really slowly. It's way up here. It's consolidating. So this is a bullish looking consolidation. And now it looks like it's just crossing the channel again. So for me, I just have a target 27 here to the upside of the channel. Maybe try to pop again, probably cross back down. That's about it for silver. And this is all bullish, and this is an inflationary indicator for the past year, and a bullish, consolidation is still inflationary. Um, I'm gonna stop this one here. I do want to do an inflation video, and I want to talk about deflation versus inflation. It's a really complicated topic, and I feel like every random news person and every random person on YouTube is like all in on the inflation scenario, except for just a couple of macro people. Um, but if you look at the international bond market, the euro dollar charts, things like that, it just doesn't look like the international bond trading community or the international banking system expect inflation at all. Um, Different video, different time. Not investment advice, as always. Like button or whatever. Yeah, anyway, be freaking careful. Things are getting crazy. I don't know. Oh, man. Man, if we break down here, what is it going to look like? What if we don't make it up there? I still think we're making it up. I still think we're headed for the top of that bull channel, but a breakdown here could be something. It could be a legit pullback. Anyway, we'll see what happens. Yeah, this tomorrow could be really interesting, and next week could be crazy. So anyway, we'll see what's up. Happy trading.